Hello everybody, what's up? Today is Tuesday, February 13th, 2024. Today we're going to talk about AMC, do an update for you. Sorry for the long delay on these update videos. I recently started a new part-time job, and then about a week later I crushed my finger and fractured it. So it's been a crazy couple of weeks for me, and it's been a little difficult to kind of keep up with everything. Meanwhile, AMC was kind of just coasting downward, and it had formed a decent, what I would say, deviation on RSI, which on this bottom, we had a higher RSI bottom with a lower price hit on the 4-hour, and then we have a pretty decent reaction to the upside. We're seeing a bit of a correction right now, and I think it's going to potentially continue to correct. It's possible that that was enough of a back test, but I don't feel that that's a very normal one for us. Usually it takes a little bit longer and it's a little more involved, and I would not be surprised if it took all week and didn't really move until next Monday. Right now I'm estimating we're going to come back down to about 408, and basically we're going to kind of finish off this pattern here. And if we can find a support around 408, we should be in good shape to have continuation upward. So during this stream, I'm not going to get, I always say I'm not going to get into detail about stuff. There's some things that I kind of have to sort of explain, but I'm going to keep it sort of brief today if I can. Basically what I think is we're going to pull back to 408, and then I think we're going to have a continuation run. Probably into earnings. I don't expect over the next couple of weeks that we're going to be rocketing past like $7, but I do think it's possible that by earnings we are either above 6 here or about around this kind of support at 729. I think it's very likely that that's where we are, and then we're going to make a decision about down versus up. And I do believe if we continue upward, we are destined to go up and hit roughly 14, and this has kind of been one that I talked about a lot. I think we're going to go up and fill that gap around 1346, and basically at that point it's a debate on whether or not we redistribute back down for a new low, in which case we'd be heading all the way back down to $3, or we find support here and we continue on up to 20. I don't think that there's a whole lot of possibility in between. And what I mean by that is bullish probability. Like, this seems the most likely bullish outcome. And I'll get to this in a little more detail as we go through the video. But suffice to say that if you're going to reject, we're either going to reject at $6 or at $8, basically, like $7 to $8 right here. Same place we kind of rejected off of back on December 14th. On a retest there. There's a lot of little gaps here and there on the way down, and then of course we have a very large gap going up to 1014 and another large one going up to 13, and a lot of the times those will get filled over time. We're definitely very, very, very oversold. Historically, we haven't been this oversold since before the 2020 run, and I know it depends on what time frame you're on, but when I look at this, I'm fairly convinced that this is a very big move incoming, maybe a few 100%. Yeah, since back here. This is in May. This is kind of still not as low. And then if you go way back, and then maybe I was looking at like the weekly when I looked at it. So if I'm wrong, yeah, here it is. So this is way back October 2020, which was kind of the move before the move kind of thing. So you might be saying, well, could we experience something like this where we bounce and then come down low and then explode to the upside? Sure. But right now we're kind of already in this sort of walk-up phase where we're starting to see that higher amounts of ascending accumulation. And really what I'm expecting is this kind of a pullback, and then we're going to take off. I don't think it's going to be like January where you just kind of rocket, 1,000,000%, but I do think that it's very similar to what happens in most of our walk-ups, and I do think that's what we're about to do. Based on the scale of this, I talked about this a bit in the stream. Most people probably aren't going to sit there and watch that whole stream. If you do, you'll probably understand a little better what I'm thinking, but I think we're going to pull back here to about the 50 on 4 hour, and we're going to come down to 408, and then we're going to see it move. And this is a pretty classic AMC slingshot setup. The thing is according to the repetition of the cycles here, we're talking about the sine wave, there still would be a period after a big move here where you would come back low and you would accumulate back in the threes, maybe even high twos. And that would happen over the course of like a couple years. So it would be a very long, maybe a year actually. I don't want to say a couple years, but about a year before we see like 20. And that would happen potentially in 2025. And I know that's not going to be the popular opinion. Most people are thinking, well, we're just rocket up straight up. But that's kind of where I'm at right now. Basically, during the stream, I talked about this particular cycle right here. And this is a very important, a lot of the charts that we look at are pretty important, but this one's a very important, I think, conceptual chart, because what I did is I basically found I used a couple of those ascending, I don't know what you want to call them. They're kind of trend lines, they're kind of creeks because they don't always respect them as trends. Sometimes it's a little bit more of like that M cross that we see, and it's really a bearish creek because you're advancing downward each time, and so it's not really been acting as a bullish creek, which would be like jumping to the upside. Instead we're jumping to the downside. Well, I've been talking about these for, I don't know, 6 or 7 months now. They're repeating all over the place, and what I did is I took these two right here, and then I noticed that they seemed kind of equidistant to this one, so I decided to go ahead and measure it out. And you can see the green little bumps here. If you can't see that, it's a timing cycle, and what I did is I just put them on each one, and lo and behold, what we find is that it's actually quite the trip here. There's quite a lot going on throughout, and basically, like, you can kind of see it. You can see why it's important. I think there are some really significant markers here that made me kind of question a lot. Mostly on these breakdowns, like almost all of these M crosses had been jumping over these parallels, and I already knew that. That wasn't like news. But what I didn't notice was that the breakdowns here were basically all happening on one of these parallels, almost in sync, like almost in timing sync. The reason that this works here and it doesn't work timing-wise here, on the uptrend, is because this is a downward channel that's basically evenly crossing over time, right? It's a rise over run, right? If you guys remember basics of charting geometry, X versus Y, you kind of are moving at a steady slope. And so it's hitting this line at a very steady rate. What's bizarre to me is that you can pretty clearly see that these breakdowns are happening almost perfectly over time, that there's a run up and then there's a breakdown, and these breakdowns are happening right off of these key intervals. We're talking about things like the breakdown of the March run up. We're talking about the November drop off from 2021. We're talking about that early June drop off, June into July, and going into August. We're talking about February, right, of last year. We're talking about the ape creation. I mean, these are really critical points. They're not like, like none of them are insignificant. Like they're all significant. And this one as well, like that big run up that we had to the top of the channel, right before this thing dumped. And then look at the cross here. The cross happens perfectly. It passes through right at the reverse split date. It passed through one of those, and that was like that rotation that happened here down to here. The rest of this, you can see that we laid on it more recently. This was basically September through December of this past year, and then all the way down to this bottom. And we are right now although this is a slightly outdated chart, we are right now actually, we reapproached it. We hit it again. So it's really interesting because of that dynamic. When you go back in time, you'll start to see that that doesn't really work out as well. And the timing itself doesn't really make a whole lot of sense. Again, when you look at this during the uptrend, and of course it makes some sense because in this case, we're not jumping bearish creeks, we're jumping bullish creeks, we're going up, right? And you can see we're laying up on these 1, 2, 3 paths that I've got here. And basically what those channels represent are just parallel channels that originated with the very first downtrend. But I will say this, you can see very clearly that there's some very significant markers still. Even though the timing here is not nearly as even-paced as this is, it's kind of erratic, it's still very significant. You have a marker here and during COVID, that's the COVID drop, and then you have that reversal that also happens on one of these parallels. You can see the walk up, and then the sell off down to the next one. Again, that pivot happens on one of the parallels. Timing wise, it doesn't really add up that much, but in terms of like location, absolutely, And then when you look at these key markers, you've got the big breakout in the June run happening right along that parallel, and then of course the top in June redistributing along one of those parallels, which correlated with, not surprisingly, perhaps, is that buy button removal, which I've said repeatedly. It's weird because the narrative around the buy button removal feels haphazard at times. It feels like it was planned, but it was like a last minute quick plan to remove the buy button, right? But when you look back at the chart, and so like it should have just been some random number, right? They just decided to do it. But when you look back at the chart, it's not random. Like it continually appears as this very critical point, which it frankly, like it is controlled from there on in. And whether or not we recognize it as, well, it's retrospectively, it's being used as a trend. When you look back, yeah, of course it's being used as a trend. It's still very significant. I mean, it's like there's like a fib level associated with it. It's got these bizarre kind of technical markers that just, to me, it was just very strange. It feels very mechanical. It doesn't feel like a human just suddenly made a decision, to remove the buy button, which is bizarre, I know. Beyond that point, you can see that, of course, like going back in time, some of these critical junctures also happen on these parallels. There's a gap down way back in 2017. But I really wanted to point out that I think, and I'm not 100% positive, I think this parallels actually don't originate here during the run-up. I think they originate at the very beginning of the stock. They represent the earliest trends. There's 3 trends here in the very beginning of the stock, 3 trajectories, if you will, where the stock is rising a pretty consistent rate, and they match with the parallels that we see. And then from then on, it's not quite as clear. It doesn't really look right, but I think it's because it's adopting those downward slopes more often. And then, of course, the big critical moment here is where the breakdown originally happens. This is, I think, late 2016 going into 2017, and that's where this all downtrend starts. This is where the 2 tops are, the original tops for the stock. And I've been making a point that this is the main creek that we jumped, right? And we found support on it, and then we rose. And I think this is the creek that we've been coming back to and that we ultimately need to test. And here's my conclusion. My conclusion is that we haven't gotten there yet. I know it sounds weird, and some might say that, no, we've gotten there, we've gotten past it. Well, if you use extended hours, which is the way this chart was pictured, we haven't gotten there yet. It's just, there's no way to draw it, like, honestly, where you've already reached it. You could say, like, well, why don't you use the top here in 2016 and then this other top in 2018, and that would have reached it already. Well, yeah, but it also would have dropped beneath it. These parallels are actually intrinsically tied to the motions of the stock. Again, you can see why. You've got the entire length of the retest here after the buy button removal, back down to the creek test. That's really significant. You have the downtrend for the last 2 years, and those two tops that were made, the first being the June 2nd peak, all-time high, and the second being way over here, August 2023, that big peak. Those parallels are very critical. And when you attach that parallel to this top, we're talking about these parallels being attached over here, and you attach it to top, it matches like pretty much perfectly for the first few months here on this cat ear. And then later on, it's checked in like September of 2020. And then, of course, during that buy button surged back down, it really is checked in February of 2021. There are times where it's pushed, before that. And I think that's where the creek confusion kind of lays in. It's like, well, why wouldn't that have raised it? I don't know, but maybe it's not like a creek in the way that we think about it. So when I had done the mirroring, which I did a big video on that, I thought that what seemed most likely is that we would probably come down to that creek and then rock it back up just like we did here if it was going to mirror 1-to-1. And I said, I think we're going to go to 14, but then if it continued, it would then drop all the way back down and you'd end up at 0. Well, that timing doesn't work out anymore. And there's been a million other things that I've talked about, mainly that we are experiencing a whole lot of checks on the cat ear, as I call it, creeks. And those guys are super important because they represent ultimately like where the sine wave is pointing you when you're kind of turning. So you can think about like tangents. That's where the algorithm kind of points to the bottom of the waves. And usually where they intersect is where you end up with a really big move. So all of that being said, my expectation, if you look at the top here on this particular image, my expectation is that we are basically coming into this final drop where we're supposed to be checking that bottom. And it is low, and it does come and make a new low. But it's essentially like once it reverses and comes back out of here completely, okay, it has to come out completely, that could be considered possibly like a spring action. And you could be in a situation where you're basically like walking up in these giant M's, and they would be huge, they wouldn't be small, until you walk your way out of, this area. And ultimately you'd be heading on towards this retest way up here around 36, which would come back to fill those gaps that we made. I know they go up to like 45, but ultimately like that would be probable, as like if you look at the overall structure here, you just need that first push kind of to retest where that all-time high bottom is here. I do think you're going to check this middle channel line coming down, and I think that's where we're going to be heading now. And that's part of the reason why I think we're going up where we're going. There's other things as well. But then after that, in typical fashion, you should see some kind of a sell-off, and then it's going to either make a new low and create kind of a double bottom spring, or it's going to make a higher low. And in which case, you're going to then advance across this middle line, as well as some other creeks as well. And there's a million other things we could check with that. But the point is that if this is what I think it is, and this whole structure is basically a representation of what we see here and here. I've talked about that at length in other videos, that there's 5 or 6 times this structure appears, and it's playing out on the macro. If that's the case, then we would experience the large M cross and then potentially head back towards quote-unquote all-time highs. I'm not convinced that we're ever going to get past the 77 mark right here. It's like a 50% retrace basically on this huge move down. And the reason I'm not convinced of that is because of the reverse split. And I think that there's a possibility that we kind of get stuck underneath this main channel and then possibly advance to 77 in the future. But that's probably a ways off anyways. So you might be saying, well, you did another video and it didn't really work out because you were talking about these boxes where you had measured it out mathematically and you said the math was right and you were pretty confident about that, but it hasn't happened. Like we didn't seem to get that kind of accurate bounce with that move. But the thing is we did. The problem is that it was hard for me, and it still is, to determine if we're in a 50% marker like this versus the bottom like this. But if I'm being like, and I feel like I'm being, I'm being fair when I say that I think we're more or less likely at the bottom, because when you look at the big picture here, you can see pretty clearly like where these occur on the wave and on that widening. And we're right there, like we're on that bottom. So we should be experiencing this big move to the upside. And so the question is more like, well, where does it go, right? And there's a number of ways to sort of debate this. Essentially, it's kind of like a 50% retest on the sine wave. Often it comes back to retest the previous floor, but it doesn't do it the same way every time. So you can say like, well, it's this or it's that, but there's not really one way. It's just not. If it was a pattern, I would be like, yeah, this is what it does, but that's not the case. Instead, what you see is that typically it kind of has to do with the way these S-curves have formed. So you can see there's like a large S-curve right here and then a smaller one right here. The smaller one being on the second half, right, of the bigger one. And those are kind of like the key markers, right? Like this is the second S-curve, and you can see this is where we hit like a 50% support, our retracement, and then on the bigger one, and then we end up driving all the way back up to the top. And this ends up being kind of like a, halfway point between the top here and the bottom. And there's not really much else to it. It does come up, it retests this top, it's distributive, it goes a little too high, and then it sells off. The same thing applies here as well. You've got some key markers, like this is the halfway point on the little S-curve, and this comes up, meets it, and then drops. So what I ended up concluding, and I brought this forward in the other video, was that what seems to be most important is the upthrust passes through this middle quote-unquote 50% line. It's not really 50%, but it passes through this marker right here, and then ultimately like it finds support there and then redistributes there. You can see where the ears set up along it. The same thing happened right here. It rejected underneath it. And then the ultimate cross, whenever that happens, is a breakout there, and you end up running back up to the top. And the same thing happened here. We had a large M pattern cross, and then you run up to the top. So that's where I was, and I had measured out all this stuff, and I was waiting for this drop, so you get the slingshot, and then it went really, really low. And it's almost like, well, it's distributing. It's no longer in a range. You can't count it as the same thing. But here's the deal. And I did this on stream the other day, so I get to give you like the short version of it. This is fine. Like this has not been changed since I did it. And I did this like back before December. I had a few lines on the RSI that were set up to point to where I thought the bottom was going to be. And I made a case that we were either going to be rocketing right here on this December 13th and 14th up to the high, or we'd be heading down to a low, and they were pretty dramatically different. I mean, it was really like super different, right? Like one was like, we're going to be way up here versus way down here. And I didn't like the one that went low, but I said, hey, it's a possibility that we're at a low coming into January 18th. That was specifically the date that I picked out. What's weird is that the RSI actually did get down there by the 16th, and it is the low. But the price continued to go down. It did not correct. Instead, we got a divergence, and then, of course, you can see that divergence actually held right here, almost like it hit like that nice W bottom. It held and it crossed. It crossed the major creek, which began here back on October of 2023. That was way up at $11. The first time we hit 11, not the second time. So what's bizarre is like this is clear as day to me. This is like an M cross. So if I were to draw this out on RSI, there's no debating for me. Like that's it right there. So this would represent that sine wave cross to the downside, and then you would expect there to be some kind of a move to go check it again, right? And it's pointing, of course, to earnings, which is convenient, but also, you'll notice that, of course, this downward M also created a downtrend, and it broke out, again, right around the time that I kind of anticipated it might if we were to go down first, not up. So what does that make of all the lines that you've got, all the mathematical lines? What's weird is that they don't work. You can't do the slingshot, right, if it's not horizontal, or at least that's what I thought at first. But then I started looking at the RSI and I'm like, well, I don't get it. It looks correct. This is exactly what I was expecting on RSI. And you can see right here that push up. This is where those M tops were going to be on the second push, and it just never pushed. It didn't break, which we've now broken, right? It didn't ever break out of that really critical creek that we needed to jump. That's just not been able to get over, since we first dropped down. Multiple rejections on it. And so what's bizarre is, like, right here, that advancement doesn't happen, right? You don't jump the creek there, but yet on RSI we sort of did. You can see it right there. So what's bizarre is it's been doing exactly what we saw prior to the March 2022 move, but it's happening like downward, right? So I started thinking about the big picture here, and here's what I've essentially concluded, though it may not be like entirely accurate. It's debatable. This is like the main pattern, right, of everything. It's just that kind of distributive cat ear pattern. And we are experiencing the tail end of a really, really large one. So it's possible that the price being driven low is really, again, more for the purpose of accumulating at a certain price and getting those shorts involved, essentially to trap them, right? And to have a big move back to the upside, you would need to have all of those pieces in line. But what's strange about it is that instead of being horizontal and basically forming a range, it's coming down. When I started to draw this out with these parallels, you can see these red parallels, everything kind of clicked. It was like all of a sudden I was like, oh, okay. So all I did was I drew from September 5th through November 1st. And suddenly when you look at it that way, it's like the prior to March move, but everything lines up diagonally. And when I did it that way, lo and behold, I got a price target right here of like $14. Now that might not be enough for some folks, but the thing is like I did all the measure at that canted angle, like I did it all at that slant. So I had a cleaner chart that I worked with during the stream, and that was this one. And what I noticed is that when you look back, and instead of using the widening, I used that midline that I talked about earlier. And that's this guy right here. I know it's not a different color, so I'll make it, I don't know, let's make it like a blue. Is that blue line? That was that midline that I talked about where you're kind of distributing. Notice that I drew it a little different because I decided to use a slightly different parallel. And what I found is that as these guys have solidly distributed, they've also jumped across it and pushed off. So I used that push off point instead of what I had done previously, which was kind of do a 50-50 split up front, which is why I called it a midline. What I found is that those parallels seem really significant. And you can see that what appears to have happened on that reverse split is we've shifted down into this like lower channel. And I put a marker on here, did the midline shift down, because all of the interaction that you see previously, and it kind of makes sense, all of the interaction you see, these formations that I've been talking about, and I've been saying like, well, they're iterations, right? All of them interact with this guy. And once you get to, and there's another one right here, once you get to the end and you drop down, you're now shifted beneath the bottom of those interactions here. And when I started to look at it that way, and I'm like, well, wait a minute, what if the same thing happens? What if the same formation happens, but it's happening beneath, right? The midline shift, and the midline is now the bottom, basically. Does this give you an adequate check? And what I found is when I took that measurement, I know it sounds confusing, and I used the slingshot, it actually gave me the first midline. So it actually gave me a target of that original midline, which kind of confirmed to me that it's possible that the midline has like just shifted down. Now, it might sound like a bunch of gobbledygook to a lot of folks. I think I did a pretty decent job in the stream kind of walking through it when we got there, as I was kind of like observing that. But basically, like, I went back and I checked and I said, well, is it possible then that this whole thing is just shifted down? And not surprisingly, but kind of still a little weird, is I took the trajectories that I had originally mapped, which was right here, and I had mapped them up from where I thought we were going to be at 9 down to the bottom. And all I did was shift them down. So they still have the same center line, and all I did was shift them down and they matched. So the trajectories were mathematically like built around a box that I took a 50% of, like, this guy basically is where I thought it was going to be. I know it's kind of confusing, but if you go back, this one's a little bit easier to see. This is the trajectory right here. And basically it's like 1/4 of this box. You see this big large box, which is the whole formation. It's this quarter, and all I did was take it from point to the middle, and it's a perfect trajectory. I did the same thing, but way before we actually started dropping, before December 14th, and I had it set up high here. And it didn't make it. It never went up there. It never went to meet the trajectory. It never went back to 50% and then came back down. You know, it didn't ever come back up to here, which was going to be like, it was going to be like 880 and then come down. But what's bizarre is, like, if you take that same line, like here's where it was supposed to be, right? Here, after it rose and then dropped again, and you drop it down, it's the same trajectory, like, which is bizarre. It's almost like the run didn't advance right beyond the creek, almost like they didn't want it to, right? And if it had, you see how we would have been right on top of the creek, like at the exact same time. If this had run up to that 888 target on that December 15th move, you can see that trajectory would have brought us right back down. When it hit the low, that trajectory would have put us right on top of that creek, which is perfect. That's why I thought it was so mathematically solid. Well, guess what? The trajectory never left. Like, it's the same trajectory. It's set up lower. When you look at that and then you look at where it would be then at the end, you would basically be getting really close to, like, coming back up to this $7.25 mark, essentially by earnings. I mean, it's basically like right here. This is that box, although it's shifted down. And it's essentially like you're going to get there on earnings day. I mean, it's a perfect like 50-50 swing around there, which is the middle of the structure. So what's crazy is that, again, the expectation was that we were going to get up to this particular point. And also, weirdly, and you can see it as I'm moving it around, when you shift this box down to the 50%, you see how it didn't match, like it didn't come up. But notice that, like, it came to the bottom. Like, it's like a perfect split. So it's a really bizarre kind of setup where I think that everything gets shifted down a lot, and that's just the way that it is. When I took the trajectories and I mapped them out according to the new one that we have, it didn't look like it quite got there, you know, at least not according to RSI, but it turns out this final trajectory mirroring outward also does a pretty good job of getting us there. So all of that being said, that's the confirmation for me. That's all I really needed to know. Because I needed to know if, like, mathematically, like, this made any sense. So what it concluding is that, yeah, there's these gaps that are there. It's pretty obvious you could get there, but the trajectories are pointing to that location at that particular time. And when you look at the big picture, there's a number of other things that are going on here. When I took a look and I said, well, where would the structure be at that 50% line? And it's really interesting because if you go from the breakdown The reason I did this, again, I know it's kind of like, where are you going with all this, dude? Like, this is a lot. Well, the reason I did it has to do with early measurements here. It was a comparative measuring system. So I'm basically comparing it proportionally, but like, where is that marker at? And bizarrely, like, in order for you to get like this kind of perfect measured system and like hit these points like almost perfectly, notice that the 50% mark from the top at that 744, if you pass through the 546 is at 408, which ended up being the floor. So it's like a perfect like 50-50 swing. This was set up on the way down, okay? And then also take that 408, and I know it says 401, but I'm just kind of guessing, right? I'm eyeballing it, and drive it up to the top, right, at $11, and look at where that 50% is. It's right at that 670 level. So if you all remember, the slingshot is like a series of 50% reductions. And you take it up to the top here at 1384, and you can see that's right where we took off at 737. Everything kind of leading to that 408. And that's what we see in those slingshots, is that you get this compression downward of like 50% reductions. And then as you go back to the top, those 50% reductions are then met. And it works out almost perfectly, where you basically have this like 50-50 swing back up to here, and then you have another bigger 50-50 swing back up to here, and then possibly a bigger 50-50 to the final target. So the goal ultimately, I think, is going to be to retest 33. I think that is pretty much the main like long-term goal. But with all of this shifting happening, the measurements still add up, and they give you a lower target than what we were talking about before. We were talking about like 17 to 20 before, but they give you a very, very common sense target here, which is coming back up to 11 and then probably seeing an extension all the way up to that $14 mark, which coincides with what we had originally thought about going to 14. So it's kind of crazy because the shift, while it's bizarre and annoying, does seem to continue the mathematics that we were setting up before. Okay. Now, that doesn't necessarily mean it's going to happen. And I say it every time, like, just because it measures out well doesn't mean it's going to happen. There's also this kind of lingering thought that I have about coming back down later, and I don't want to sugarcoat it. Like, I totally think this thing could drop and come back down to 250 and have a very long-winded, slow walk-up back up to like 25. And originally I had thought that we were going to come back and retest this line right here. But if the shift value is what we think it is, you see this hook that happened, it could be that they're setting up the whole thing, the whole schematic, and it almost makes more sense if you take all of this and drive it up top here, right? That's what I'm trying to say, is like shifting it all up. It would basically like prevent you from advancing past like 24. And I know that seems a little bit ridiculous. Like, why not? You just told me it could go really high. Well, that's, again, a more conservative scenario, but it has to do with this kind of shifting value. And what I did is I looked at how the previous ones moved. You can see these parallels. They're kind of flattening out. And this is the current parallel that we have presently. Like, it's the only one we have. And so therefore it's really the only one that we can kind of look at and say is probable. It's also possible it's even lower, and that would be in a case where this doesn't advance past like 11, right? But this is the most likely parallel, and that means that you're going to end up jumping and then potentially making a new low. You could make a higher low here and then advancing again. Like I said, this is almost exactly the same, but this is a more bullish scenario where instead you get the larger M cross going up. And that's an advancement to new all-time highs, quote unquote, although it wouldn't necessarily feel that way, right? Because we'd be at like $300, and people would be like, it's a new all-time high, but that's really not, the case. It's like way back here. So I said I wasn't going to be super long-winded trying to explain the reasoning behind things, because I don't like, I got to put the work in. I want to make sure I explain it as well as I can. But I'll just say, like, going back to what I said in the very beginning, it seems very likely to me that we're about to get that big run up, but we need to have a pullback. It would be ideally to 408. And once we get to 408, if we can see that smart money buy-in, I think this thing's going to probably pretty quickly rocket. But I think on earnings, you're going to see, and it's possible this could take until earnings, like it could take a really long time to get going. But I think it's possible that by earnings, you're already back up kind of this like midway around the fives, maybe even higher, because the trajectory is kind of determine like how quickly you move, and they're very fast. You can see these downward trajectories are super quick. And so the advancement of these to the other side should also be equally as fast. Like it should be moving at like 70 degrees once it takes off. So you're going to see the advancements, I think, pretty quickly. And then mathematically, like the ones that I drew out, even though they're a little bit wider, they also lead you up fairly fast. So there should be, if I'm correct about it, a pretty shallow, bottom here, and then a big run up, and then a pullback, sideways action, and then a run up again. I did it a little bit more detail here. You're going to get an expansion perhaps up into the top. This is where you might get that extension forward, and potentially this is the run that we're looking at. It could be way faster, but the March run took about 2 weeks, 2 to 3 weeks. I think it was more like a month altogether, and I think that's likely. And this may not seem like a lot to some, but at this point, this is like a 300% run. So this is bigger than the March run up. It's bigger than most of the other run ups we've had since COVID. I mean, since the big giant one. So it's a very significant move just to say, oh, it can go from here to 14. You may not think that's significant, but that's very, very high. That's a big move. So even still, I have to be really careful, and I have to tell you guys, like, look, I think that it's possible that 7 ends up being some kind of a problem area. I think it's possible 11 becomes a problem area. I think those two areas could be very significant for us in terms of stopping us. And then ultimately, I don't really feel that strongly that we're going to stay above that quote unquote midline I talked about. I think we're going to probably advance to it. We might get a spike past it. But as soon as we drop beneath it and start distributing, like it's probably over. Like it's probably the end of it. Whether that happens early in March or it happens late in March, I can't say for sure, but that's what I would imagine. So all that being said, I'm looking for that $4, that big smart money buy-in, and then this really strong move probably going into earnings and then beyond. Hopefully this works out. We're not just in like another distribution that's heading down. Thank you all for your patience, and I will talk to you later.